What is up, everybody? Dan again, Stocktrades.ca. Welcome back to the channel. I figured this was big enough news that I should just turn the microphone on and record a quick video here on TD Bank. The news that TD Bank, the fines came out for its anti-money laundering scandal, which was generally in line with what the company had put aside. I would imagine the company was very well aware of what the fines would come in at, but the one thing that is really impacting the stock right now, and I think it's down like 6+% at the time of me filming this, which is huge, a huge drop for a Canadian bank, is its US growth limits. So if you've been a watcher of my content, if you've read it on the Stocktrades.ca website, if you've most importantly listened to the TCI podcast, we have been stating that this U.S. asset cap was a real possibility for a very long time. I think you could probably go back 6-7 months we've been mentioning ever since this started to surface. And one of the main issues for us was pretty much an example of how big of an impact an asset cap really is, especially on a bank like TD, who has for pretty much the better part of 20 years relied almost not solely, but a huge chunk of its growth was on acquiring smaller U.S. banks, growth by acquisition, driving that overall growth in the United States. And this is a bank that is very heavily exposed to the United States. One could argue the Canadian bank with the most U.S. exposure, and now it has had a cap on its assets. So what exactly does this mean? This effectively means that TD Bank's overall loans and assets on the retail side of the U.S. business, they're going to be capped at a particular amount of assets. And once it gets to that cap, it will not be allowed to acquire any companies. It won't be allowed to add any more loans, etc. So what this really does is it impacts earnings over the short to midterm, especially, up until this asset cap is lifted. If we go down to the article, Toronto Dominion Bank will pay about $3 billion in penalties and face restrictions on its U.S. growth. So regulators are likely to announce a settlement with the Canadian bank on Thursdays, though timing may change. So this is not absolutely official, but there's so many news outlets coming out with it right now that this is probably going to be the situation. So an asset cap seems certain to prevent the bank from carrying on growth by acquisition strategy it has followed in U.S. retail banking for much of the past 2 decades. Now, Wells Fargo has been under similar regulatory restrictions on the size of its balance sheet for several years. So what Wells Fargo did, at least I'm pretty sure they ended up like making a bunch of accounts, just pretty much fake accounts, etc., things like that for, kind of fabricated growth. And U.S. regulators absolutely put the hammer down on them. So at the end of 2017, they weren't allowed to grow their assets past, I believe it was 1.95 trillion. And I've actually pulled up a chart here of Wells Fargo and the impact of that asset cap on its stock price. So the asset cap was placed at the end of 2017, and we can see here from 2017 till now, Wells Fargo has been absolute dead money. So price-wise, it shrank about 4.16%. So this does not factor dividends in, but effectively, since 2017, all you've earned with this company is the dividends that it pays. So if we go to, let's say, total return, so we can get the dividends, and let's annualize these values. This stock, since that asset cap, has returned 2.12% annually. Now, when we go and look up the S&P 500, it has underperformed the S&P 500 by over 9% annualized. So if we're talking just in simple terms, $10,000 invested, you'd have around 21,000 just shy of with the S&P 500, and you'd have around 11,530 with Wells Fargo. It's pretty much paid nothing but dividends because of the asset cap. So will it be the same with TD Bank? It's very difficult to tell because the details of the asset cap have not come out yet. It could be heavily restrictive. It could be fairly light. That is very difficult difficult to tell, but I will say right now, if the asset cap is fairly restrictive, this is really going to hit the bank on an earnings basis. And when we look to the bank, it's already struggled mightily since 2022. We're looking at, share price of $107 all the way down to $80. We can see now, as I'm filming this, it's down to 7.3%. 7.3% dip on a Canadian bank is a monumental one-day fall. These banks usually do not fall that much. So the one thing I do want to state is when we look at from a valuation basis from TD Bank, we can see right now it's trading at 9.4x expected earnings, which is probably going to be one of the cheaper valuations out of the big banks moving forward. However, what I will say is these forward price to earnings multiples are based on analyst estimates. So it is very, very, very likely that after the details of that asset cap are going to come out, the bank will be revised downwards. I can't imagine analysts are revising earnings upwards because of this. They're going to be revised downwards. So this price to earnings, this forward price to earnings is going to increase. This PEG of 0.25, which would suggest that the stock is fairly undervalued. I would imagine that's being adjusted as well. And if you're wondering why the trailing price to earnings is so high, that's pretty much just because of the AML fines. It's kind of artificially bloating the earnings. So what do I feel will happen out of all of this? Well, first off, when we look to the bank's payout ratios, we're going to see a very high dividend payout ratio. We're looking at, 86.47%. I would expect that to somewhat normalize because the fines are over with. I would expect that to come lower over the next year or so. However, I would not be shocked if this company did not raise the dividend. Depending on the severity of the fines, if they do raise the dividend, it's going to be at a very low level. I would predict nowhere close to, let's say, institutions like Royal Bank or National Bank. And I really think that the company is going to have to take a prudent approach depending on how severe the regulatory fines are. So TD Bank has been long known for being one of the faster growing banks, growth by acquisition strategy in the United States, and as a result, it's had some of the highest dividend growth rates out of any Canadian banks as well. I would expect that is over, at least for the short term. I would expect the company to, going out on a limb here, and I don't even really think I'm going out on much of a limb. I do expect TD Bank to be the weakest performing Canadian bank out of the big six moving forward. And how weak really depends on that asset cap. And we're going to learn more about that probably today or maybe even tomorrow. I sold my Toronto Dominion Bank stocks at the start of the year when these issues started to surface. I didn't really feel comfortable with it, and I kind of went back again and I referenced that whole Wells Fargo issue, how badly it was impacted by the asset cap, and I just said, I don't really want to deal with a situation like this, so I did end up selling. So that's pretty much it for the video, everybody. I thought I'd drop my quick thoughts. Let me know if you're buying Toronto Dominion Bank, if you've sold out of it, how badly you think the restrictions will be. I want to hear from you in the comments. And as always, like the video, subscribe to the channel, and I'll see you next time for more great Canadian content.